Thank you for joining me. I'm Alex, and I want to talk about Roku today. So, what they do is streaming services. They put out basically Amazon Fire TV, Apple TV, Chromecast. So, anyway, what they do is they provide services that make a TV smart. Current price $324, which gives them a market cap of $41 billion. Dividend is zero. Don't expect that to change, especially with the current income. Revenue $1.1 billion, earnings negative $60 million, which gives them a PE of about negative 700. And the previous one would have been a PE of negative 4,000 or something like that. So for a company that is losing money, it's not losing money very quickly. So definitely not a step in the right direction, but not terrible. Total assets $1.5 billion, total liabilities $772 million, which gives them a total stockholders' equity of $698 million, which I really like the balance sheet. I think that pretty much all of these numbers are not really in line with their market cap, so kind of a big problem here. Risk factors being that, as I mentioned, their competitor to Amazon Fire TV, Apple TV, other smart TVs, Chromecast, there's probably a few that I'm missing. And that's generally not a good thing because obviously Apple and Google and Amazon are very well-known names, and Roku, they got there early, but I think that it's pretty much a matter of time before they get overtaken by other companies. And I'm pretty sure I said that last year too. Anyway, so revenue growth of 50-ish%, certainly pretty nice. So if they could keep growing in a vastly growing market, I think that they could be expected to make a profit next year. Obviously, that's not forecast, so I'm going to say that it's probably not going to happen. Obviously, this year has been good for streaming services, so that's obviously a good thing for them as well. Overall, I would be weary of a company that has so many well-known names as competitors. So overall, for a growth investor, the growth is very nice. 50% revenue growth is certainly amazing, and I think that it's worth looking into this company. The downside is that their revenue is 2%-ish of their market cap, which is certainly not enough. And it would take a long time, even at the current revenue growth, before they're at a reasonable valuation. So I don't think it's really worth investing in. But I think it's worth looking into the company and seeing if they can maybe even increase their growth. Overall, I don't think that that's going to happen with the competitors entering the market, even with the vastly growing market. So I would be wary of that. Obviously, there's nothing here for a dividend investor. For a value investor, the PE of negative 700 certainly not quite where it needs to be. The balance sheet is nice, but not in line with their market cap. And so overall, I would strongly advise against investing in this. That's it for me for today. If you like this video, make sure to subscribe and come here with more videos every day before market open. I hope you have a successful day.